So I want to clear up a misconception that many people have right now. Many people are saying that mortgage rates are zero. That is not true. There's a difference between the Fed rate and mortgage rates. They're both interest rates, but they're both different. The Fed interest rate is the rate that banks lend to each other. So it's a common error that the Federal Reserve makes up mortgage rates. And in fact, that is not true. Mortgage rates are made up on Wall Street. Now, they are influenced by the Fed, but the Fed does not control it. Mortgages are determined by what they call mortgage backed securities, which is bought and sold on Wall Street. The way that the Fed influences the mortgage interest rates is usually when they meet up, which is about every 6 weeks. I think they meet up about 8 times a year. And whenever they meet up and they deem that there is a positive outlook on the market, mortgage interest rates go up. When they see a negative outlook on the market in the future, of course, then vice versa happens. Mortgage interest rates go down. So usually when they cut, and by they I mean the Fed cuts their interest rate, they're doing so because they're looking to stimulate the economy. So in summary, the Fed interest rate is different from mortgage interest rates. However, the Fed does influence mortgage rates. So just know that when you hear that the Fed has cut their rate to zero, that does not mean that mortgage interest rates are zero. That means that the amount or the interest rate that banks are lending to each other is zero. So now that we got that out of the way, my prediction for the future is that mortgage interest rates will rise. You can mark it on your calendar, March 26, 2020. Daniel Dominguez predicted that mortgage interest rates would rise. The reason I say that is because of inflation. As you guys have noticed, they just recently passed the stimulus bill that they were looking to pass, which will pump a significant amount of money into the system. And what that is going to do is that will produce inflation. I wanted to provide you guys with a scenario, simply to just show you right now what you would be getting into if you decided to purchase a home in Houston. The average home price at the moment is around $250,000 here in Houston. So if you do a home that's $250,000 and you do a conventional loan, putting about 10%, the current interest rate right now is about a 3.7 for 30-year, including the taxes and insurance, which I calculate to be around 3% if you round up of the home price. All in all, looking at that, you have a monthly payment of $1,771. Most people right now are paying more than that in rent, and they have no ownership, no equity, nothing to go by. When you put less than 20% down on a conventional loan, they require you to get MPI, which is private mortgage insurance. Whenever you get to 20% equity in your home, that payment goes away. Scenario two, now let's say you don't qualify for a conventional loan. Let's say you're a first-time home buyer. There is a loan product for you, and that is the FHA loan. And if we factor in the same price of $250,000, And usually with that type of loan, you're only required to put down 3.5%. So 250,000, you put down 3.5%. The interest rate for an FHA loan currently is around a 3.8%, 30-year fixed. With that, including the taxes and insurance, and on top of that, they do charge you an extra insurance, which is what they call the monthly mortgage insurance, MIP, and that is required for all FHA borrowers. That does not go away for the entirety of the loan. It does increase your monthly mortgage payment to around $1,934. 3.5 of 250,000 is around 8,000, almost 9,000 down, which is not bad at all. And my guess, we do have around maybe 12 to 18 months of this interest rate. But I think after that, I think interest rates will go back up if they don't go up before that, and home prices will continue to rise. So as I mentioned, right now, if you're looking at the market and saying that this is a scary time, it definitely is. However, don't let this be an opportunity that goes by you, because right now there are many homes on the market because people are not purchasing them due to fear. So if you're looking to buy a home, don't wait. Go forward and buy the home. If you have any questions about real estate, if you're an investor, get with me. I'll be more than happy to help you. If you're a first-time home buyer, get with me. I'll be more than happy to help you and to answer any questions you have.